Hey, what is going on? Welcome back to the channel. Today we're going to be taking a look at crypto.com. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. And if you haven't seen the previous update, it's going to be linked in the top right hand corner of the video. Now, I do want to mention my Twitter because I do post quick technical analysis updates over here for all the projects that we follow on the channel, plus some Bitcoin updates as well. And we do follow the DXY, the dollar index, because they do have a inverse correlation with Bitcoin. But here you can see I did have this crypto.com post over here saying that you should probably wait a bit right now because you're going to get rejected from the 20 EMA and come back down to the 55, and lo and behold, you're almost at the 55 EMA on the daily chart. Although this dude over here was telling me, nah, crypto.com goes to the moon only. Well, you know, that didn't age well, basically. But yeah, feel free to check out my Twitter. It's going to be linked down below in the description. But without further ado, jumping into the daily chart. So on the daily chart, straight off the bat, you can see that we're forming this falling wedge pattern over here. We are in a downtrend on the daily chart, landing on the 55 EMA over here. So this is actually a good sign. We're coming back down for support. The gap in between the EMAs was very, very large. And when that is the case, that is an indicator of a pullback. You can see the price was very far away from the 20 EMA. We landed on the 20, lost it as support, and then we came back down with this pullback, and we're forming this falling wedge. So obviously the target from the falling wedge is where the wedge was created over here at 60 cents. And this is perfectly aligning with the 0.5 on this Fib retracement. So from where we are right now, that is a 18.5% trade. Off the 55 EMA, that is a 19.6% trade. So we potentially can come back down even lower, and we maybe even wick off this 0.786 on the Fib retracement, because we haven't really back tested that as support after we broke out. So 46 cents is something that you should be looking as a nice support level, and from that level to the target from the falling wedge, or well, at that point we would lose the falling wedge, but to the 0.5, that's 31%, and to the full retracement of the Fib, that's 111%. So yeah, if you are going to lose this lower support line of the falling wedge, you're invalidating basically the target of the wedge, right? But if you start breaking out over here, right, you can run into the 0.618 and break down as well. So if you start breaking up, that still doesn't confirm the target, right? You need to either back test as support the upper resistance trend line over here, or get above the next resistance and back test that as support. Only then you're going to be looking at this, because a lot of the times what happens, you break out of the pattern and then you come back down and fall through the previous support level as well. So 46 cents is a nice support level. As always, I remind you to have the buy orders just a bit above the Fibonacci retracement levels. So yeah, that's what we're looking at right now. As you can see, we have the Fib retracement set to the downside over here with the targets to the downside. Obviously, if we have another major flash crash and a pretty strong correction, 38 cents is something that you want to look at. You can see that we had this massive wick over here. I doubt you could have entered even if you had buy orders, because a lot of people had buy orders at these long wicks that we had on Kucoin the day of the flash crash, and a lot of them weren't filled. So if you see these large wicks, don't feel like you missed out, because chances are you wouldn't be able to get into them anyway, because they're just scam wicks. But the EMAs are coming back closer together, which is always nice. We're losing the golden ratio over here, and that is something that I don't like. So I would like to start breaking out of this falling wedge and back test the golden ratio as support, the 0.618, because if you start losing that, hitting your head on the golden ratio, you're most likely than not looking at the 786. So yeah, that's for the daily chart on TradingView. If we jump into the daily RSI, let's see what's going on over here. So right now you're losing this multi-month support trend line, as you can see, which is quite bearish, right? You had this white trend line as well, a nice support trend line you've held since August, and you've held this one since May, and you're starting to lose all of them, and that's quite negative in my opinion. Obviously, you don't want to see that, but look for previous support levels over here, and you can pretty much see where we can potentially land. You know, it's anyone's guess where we can land. For example, if I put a trend line over here, we're just landing on that trend line, and here you can see that we've rejected this trend line before. We've been rejected from it, rather. So it's a previous resistance point, and we may hold it, right? We may fall down through it, but once you're losing this multi-month support, you know, you never really know when you're gonna, get bounced back up. But look at these, relatively, at these, previous levels of support over here, and you potentially can land on either one of them. As you can see, there's like too many of them, and you can keep doing this, but you never know which one is going to hold. So just dollar cost average once you see these dips, right? And potentially if you start entering any trades right now into crypto.com, look for a back test of resistance at these green and white trend lines, because once you lose them as support, they become resistance. So you potentially can look at a nice selling point if you're in for a quick trade. Then, once you hit, you can see on the RSI, if you start hitting your head on the white trend line, that can be your potential selling point, and then you get rejected further back down, or you break through the white trend line and hit your head on the green trend line. That can also happen. Now let's jump into Kucoin. Now, jumping into Kucoin on the 4-hourly chart, we do have a descending triangle over here. As you can see, we're holding the support, but we're making lower highs, and we're potentially going to break down. The descending triangle usually ends up with a break to the downside, so 46.38 cents is something that you should be looking for as well. But the target from the descending triangle is all the way here at 37.5 cents. But if we manage to break to the upside, which does happen occasionally, you're looking at 69.69, and I swear to God, I didn't make those numbers up. That's literally the target. If you take the trend line from the top of the triangle where it was formed all the way to the bottom of the support, and you place it somewhere around here, well, that basically, obviously, if you drag it down here to the apex, the target is going to be a bit lower. Depends on where you break out, but roughly that's what you're going to be looking at. But yeah, we can even get overextended to the 0.382 here at 72.5 cents over here. So from where we are right now, that's a nice 36 to 42% trade, but that's if we manage to hold this support. If you start losing this as support, I'll be looking at this 786 like I said previously. So yeah, that's pretty much it on the 4-hourly chart. Let's jump into some oscillators. So what happened over here? So the chart's glitched out a little bit. I do apologize. So on the 4-hourly RSI, it is looking like we're potentially creating some sort of a divergence over here. Let me just pull back that, and you can see that we're creating these double bottom patterns right now. Actually, we do have a very nice double bottom pattern for crypto.com over here. If we manage to hold that as support, you're potentially looking at a nice break to the 0.5 over here. If we manage to hold this as support and break through the previous swing high, which is this one, the local swing high. But on the 4-hourly RSI, we're not creating a similar low, we're creating a higher low basically. So we're not creating a double bottom pattern over here, as you can see. So this is sort of a bullish divergence over here you have going on. But if you start losing the support here and you start free falling to the 786, the RSI is going to create a lower high, so there will be no divergence, and you will invalidate the bullish divergence basically. On the stochastic, as you can see, we are on our way to the oversold, so potentially you can just wait a bit until you get to the oversold here on the 4-hourly chart. And taking a look at the MACD, let's see where that is. So we just got our bearish cross confirmation on the 4-hourly chart. So after you have these bearish crosses, as you can see, we do have continuations usually. And yeah, like I said, maybe just wait until you get oversold on the stochastic. But there is still a hope that we potentially are going to hold this level as support and then break out of the descending triangle, but we'll have to wait and see. So that's pretty much it. If I missed out anything on the charts, please do let me know down below in the comment section below. Check out the Twitter account that I mentioned earlier. Feel free to join the Telegram chat and the Discord server. Great communities over there. If you need any help, just go ahead and type in your question, leave your questions and requests over there. We will answer as soon as we can. There's a lot of great guys in there, and feel free to check out our Patreon. We do have a Patreon as well. great way to support me, but also a great way for me to give back to those who support me. Feel free to check that out. That's pretty much it. Thank you for watching. I'm going to catch you in the next one. Goodbye and good night.